If you've never heard of a play within a play, I'm going to show you what that specifically is today. Now, I'm going to show you that within the context of a market maker sell model. That is my primary model that I trade. I'm going to show you what that is and how you can get multiple wins within one market maker move. We had a beautiful example of that today, and I'm going to show you that. Let's go ahead and get started. Okay, here is today's price action, March 28th, and you can see this box right here. This is what I'm talking about right here. Here is a market maker sell model, and I'm going to show you exactly how this works and how you can get 1, 2, 3, 4, 5 entries and what you need to look for specifically to have the opportunity to get this trade. But before we do, let's zoom out and let's look at a higher time frame so we can get the bias for the day. Here we are on the 4-hour time frame, and as you can see right here we have all-time highs. And since we hit the all-time high on the NASDAQ, we started doing this retracement on the 4-hour. When we look at price action and where we're going to go, you typically will see price run for external liquidity and then go for internal liquidity. What I mean by that is if we look right here, this is our external liquidity grab right here. We grabbed liquidity through the all-time highs. After we grabbed all-time highs, we ran down and we rebalanced part of this daily fair value gap. Then from there, we moved back up. Let me get an arrow here. So we went from low, we went to all-time highs, then we went back down, we rebalanced this this daily breaker, then we went back up to an imbalance. Now you're going to see nothing right here. However, there on a lower time frame, you would see a fair value gap of some kind. Then we broke lower, we grabbed external liquidity again, the lows of this one we ran. Then we went back up just below these highs right here, and then we come back down again, and here we go again and again. This is the pattern that I've seen over and over. The expectation is the market is going to go lower until we see something different, until we see a market structure shift. A market structure shift is the high from the last low that was created. This is the lower low. We have the low right here that was broken. Now, as soon as this high, which is a previous day, hits, that will become our market structure shift. That is our signal on a higher time frame analysis that price is now going to go back to the all-time highs. Until we do that, we have to assume that the market is going to find that imbalance and then move lower. There we are on the 4-hour. So this is the premise I'm coming into today with. Here we are, the 15-minute. If we go to the 15-minute, this is going to be nice and pretty. This is the imbalance that price moved up after it made this lower low. We have a lower low from this low right here. We began to move up higher. We moved up into, take a look, this 15-minute fair value gap. Now guess what this 15-minute fair value gap also is? It is the bottom or the beginning of a breaker. We have a high, low, higher high, and we break lower and we come back up all the way to this breaker. Now just look at how many times this breaker is hit. Look how many times. And we referenced that back from yesterday. The breaker is my primary trading model, and this is what we're going to be looking at as we get down to the lower time frames. Okay, so we know that there is a level of resistance. This fair value gap, we stayed below the consequent encroachment of the 15-minute, and we basically traded underneath here. So at this point, as we go down to the lower time frame, I'm looking for a reason for us to go lower. Now, as you can see on the lower time frame, we actually spike up into this 15-minute fair value gap, and we find resistance. And we find resistance at the consequent encroachment. There it is. So we have our opening 9:30. We come lower. We find a breaker right here. We create the low of the day, and then we start moving higher. we grab liquidity from right here. This is our buy side liquidity. From the buy side liquidity, we also have the consequent encroachment, and my bias already was going short. My bias was that we were going to make a lower low, because overall, that is what we've been doing. We made that lower low. Here's a low. Here's our lower low. We came back up to the 15-minute fair value gap, and my expectation is that we're going to go lower. When? We didn't know. That is where we look for our model to present itself with the correct criteria, and then we can look for an entry. So now that we have that, we have our high, low, higher high. This is our breaker. Let's go down to the 1 minute and let's look at the juicy details. Here we are on the 1 minute. This is what I was looking at, and I traded this multiple times. We have our buy side liquidity. We on open, we run liquidity, and then we bounce higher. Now, at this point, I'm waiting for something to happen. I don't know when it's going to be. We make our high, we make our low, we make our higher high, and we have a fair value gap right here. I always like to see a fair value gap that we're balancing off of, or bouncing off of, to make that higher high. So here we first have our bounce, then we make a high. I thought this was the higher high. I thought this was the high, low, higher high. Yet when we came back down, we didn't break this low, and we bounced and made a higher high. Now I'm using this as my breaker. It's still bounced in this fair value gap. When it made its higher high and broke lower, if we look at this leg, we are looking for a fair value gap. That is what we want to see. Now, could a price came up to here? Absolutely. And would it still have been valid? But we have our breaker right here outlined by the blue box, and we see price come up into this 1, 2, 3, 4, 5, 6 times. 6 freaking times you have an opportunity to go short. Now, the hardest thing that I've been struggling with when it comes to the breaker is knowing when it's actually going to break lower. When is it going to go lower and not just go back up to that level multiple times? Well, we don't know. So the reality is we have to make an educated guess on what we believe price is going to do. So if we're going to make an educated guess, we have to have targets. And that is where I typically am looking for a 10, which is a 1-for-1. You look right here, we have our entry. Let's just do the entry based off the close. We have our entry right here. You would have gotten it on opportunity 1. You would have got it on opportunity 2 right here. You would have got it not on opportunity 3 on this candle, but when it comes up to this candle, you would have got it on that move lower. You would have got it on this opportunity, opportunity 4. You would have got it on this opportunity 5, and the final opportunity 6. If you were to go back to 20, we would have 1. We would have gotten it here on the 1, 2, 3 on the third opportunity. You would have gotten on the fourth opportunity, and you would have got it on the fifth opportunity in this example. Now, I did not get every move. I got this twice. I did not expect this to move 5 times in my direction. And quite frankly, when you come up multiple times, you're like, man, this has to break. This has to go higher. But it didn't, because the bias was short. And as you can see, for the day, we hit our low. This was the primary move of the day. So when you're making and you're looking for a market maker model, you're looking for your market maker sell model, okay? This is the market maker sell model in the form of a breaker. We have the buy side, we have the sell side right here, and we have multiple opportunities for entry. If you're beginning, I would recommend going 1-for-1. You will have greater chance of success of getting these wins. Yes, you're gonna have to deal with missing out on potential bigger moves, but as you do this and grow, you can begin to stretch yourself once you build the confidence that this is actually happening. Now, there are times if you have the bias wrong, what you're going to have is it's going to come here, go down, and then it's going to break higher. And over time, as you learn this, you're going to be able to identify through a higher time frame analysis when that could happen. So if you appreciate content like this, where we're breaking down different aspects of the market maker sell model and market maker buy models, consider liking and subscribing. Thanks for watching, guys. I appreciate it, and we'll see you in the next video. Take care.